financial providers of Islamic financial products, do not insist on insuring their assets through takaful, or do not make it mandatory. Many of them argue that there is no suitable takaful available, and so on and so forth, but that's one of the reasons where we have to delve in. The second one we found is that there is still not the availability of all classes of risk mitigation within takaful. So you have to go out. And this is linked to the idea that you have difficulty in arranging re-takaful. So you have to go to the reinsurance markets. So all these leakages then dig into your potential market, and we have to close them. And lastly, you have this large sector whom the urban elites have never thought of, and those are the unbanked and the people who use microfinance and so on. They have no insurance or takaful as of now. So we have been looking at all this, and our focus last year, the year before, and this year is on two things. One, as you will see from the first session, is on the London market. We believe that the reinsurance possibilities in the London market and the welcoming reception to the idea of re-takaful within the London market provides an opportunity to insure risks for takaful operators which would not otherwise be possible, and therefore, on the back of that, provide classes of insurance which are not available but which can be made available. So that's at the top end of the spectrum. At the bottom end, we are looking at how to encourage re-takaful for microfinance providers. So the first session today and the last session on this conference tomorrow are addressing these two sides of the spectrum. If we get both of these right, then we will be able to realize the potential of takaful. So, ladies and gentlemen, my appeal to you is to think in this kind of a framework, not get bogged down into the nitty-gritty of takaful models and takaful regulations and so on, important though they are for the industry operators. Tell the regulators that that's what we need to do, and let us move forward to do that. So I hope you will enjoy these deliberations of the next 2 days. And this year we have added 1.5 days for responsible finance, which any of you who have time are welcome to attend. To now take one step further, I think next year we'll have to put a lot of attention to climate change, environmental considerations, and so on. Every day you hear news that, for example, Chubb is refusing or doesn't want to insure fossil fuel assets. Aviva doesn't want to insure tobacco companies because their claims are going to come from smoking-related health issues, and so on. And more companies are beginning to think like that. Regulators are also saying that companies will have to take cognizance of these newly emerging risks. So this 1.5 days also not specifically on insurance, but they address the wider issues connected with these. With that, I leave you in the good hands of our friend and constant partner, Mr. David Weir from Norton Rose. Thank you very much. You have a small, short keynote from Mr. Max Taylor, who is the chairman of the Islamic Insurance Association of London, which has been formed over the last 3 or 4 years to try to bring together market players and see what is needed, how to enable and facilitate the reception of takaful in the London market. And ex-chairman of Lloyd's and many other flags to his bonnet, I think Max is the best qualified to tell us what we are doing and what we need to do. Thank you very much. Max Taylor.
Thank you, Iqbal. Good morning, everybody. First of all, thank you very much for the opportunity to speak, to address you, to update you on what our association has been doing. Iqbal, congratulations again on putting together an excellent agenda and for some very thought-provoking comments in your opening speech, which I think very much will hopefully provide us with a theme which we can follow through during the course of certainly the early part of this morning's activities. So I thought I would look back at the launch of the association, which was 4 years ago. I look back at some of the comments I made at the time. I said at the time that the formation of the association came in response to a clear need from the market, both in the UK and internationally. It was a time when the Islamic risk and insurance sector was undergoing a period of rapid growth, and it was very clear to us that to enhance the sector and deliver change in the Islamic insurance sector, there was a real need for greater expertise and knowledge, and this is where we felt that London could play a key role. So if we take a look at the big picture for a second, if you'll bear with me. First of all, the UK government continues to be quite clear that it wants to create and sustain a centre of excellence for Islamic financial services in London. The Islamic Financial Sectoral Advisory Group, which is part of the City UK, which advises the government, has as its priorities providing thought leadership on the direction and policy of activity relating to members' interests in Islamic finance, engaging with the UK government to promote and develop the sector as part of its trade and industry activities, advising the UK government on international and domestic issues, encouraging the use of Islamic finance for inward investment, project finance, etc., promoting the use of sukuk as an asset class with large funds and investors from the UK and overseas, and developing and extending relations with the UK and international decision makers, regulators, and economic and business stakeholders. So there is a very strong commitment from the government to Islamic finance in the UK in the round. A recent report on global trends in Islamic finances in the UK says the following: the industry's growing importance for Islamic and other investors around the world is evidenced by its strong growth in recent years. Sharia-compliant assets make up only around 1% of the world's financial assets, yet globally approximately 1 in 4 people are Muslim. Considerable potential, therefore, exists for the expansion of this market, which reminds me of a comment made at our London conference, which we held last autumn. Dr. Al Sayed, the CEO of Takaful Oman Insurance and chair of the National Bank of Oman, said in her speech that the needs of 1/4 of the world's population should not be considered a niche business, which I think we took on board as a very positive and helpful comment. So the UK is the leading Western centre for Islamic finance. It's been at the forefront of key developments. The number of institutions based in London and across the country that offer Islamic finance services is nearly double the number located in the US and far ahead of other Western countries. Over 20 banks, of which 5 are fully Sharia compliant, are licensed in the UK. The London Stock Exchange is a key global venue for the issuance of sukuk. Banks, sukuk issuance and exchange-traded products are complemented by world-leading professional services support for Islamic finance deals and transactions. The UK has created more favourable conditions for foreign real estate investors to buy UK assets, including Muslim investors who may require Islamic financing. The latest Islamic Finance Development Report by the Islamic Corporation for the Development of the Private Sector and Thomson Reuters ranks the UK 22nd out of 124 countries in terms of its overall Islamic finance offering, which puts us in first place in Europe. Assets of UK-based institutions that offer Islamic finance services totaled more than $5 billion in 2016, the last year when the numbers are available. Islamic finance has played a significant role in infrastructure development in the UK, projects you'll be familiar with, the Shard, Battersea Power Station regeneration, London Gateway, the Olympic Village, and the redevelopment of Chelsea Barracks. An important feature of the development of the UK as a centre for Islamic finance has been a range of supported government policies over the last decade which have created a fiscal and regulatory framework intended to broaden the market for Islamic financial products. The Islamic finance sector operates under legislation that applies to all sectors. Hence, there is a level playing field for both Islamic and conventional financial products. The Islamic finance retail market has developed in recent years with the launch of Sharia-compliant products, including individual savings accounts, home purchase plans, a Sharia-compliant pension scheme, and business startup financing. The government is also developing Islamic student financing. Total Sharia-compliant banking assets in the UK were around 4.5 billion in 2016. The UK is a Western leader in supporting infrastructure and the environment for Islamic finance. Services in the UK are offered by financial intermediaries, asset managers, insurance providers, and over 30 international law, accountancy and consulting firms. And last but not least, there is a growing demand for skills as Islamic finance expands, and the UK is by far the world's largest provider of Islamic finance education, offering 69 courses. So that's a big picture of UK Limited. So back to the launch of our association. However, I said at the time, the most significant missing piece has been the insurance market. And this is despite London being the home for over 3 centuries of insurance, and still the market where the world brings its most challenging insurance risks. So the formation of the association was a tangible sign that London had recognised it had a role to play in the development of insurance solutions for the Islamic world. I said that London's tried and tested legal environment facilitates product development, that London also enjoys a non-discriminatory regulatory environment. It provides a level playing field that recognises the core values at the heart of the Islamic insurance proposition. And none of that, of course, has changed. I said that Lloyd's Vision 2025 was clear on the need for greater levels of business to be sourced from new international markets, and that it enhanced this with operations in Singapore and Dubai. Since I made those comments, Lloyd's has elected a new chairman, appointed a new CEO and a new CFO, and is in the midst of a comprehensive review looking at its future. However, I can assure you that Lloyd's continues absolutely to be committed to the development of Sharia-compliant products and capacity. And you can also be assured that discussions in London as a whole support the provision of commercial insurance products in a Sharia-compliant manner, therefore complementing the government's engagement with Islamic banks and business enterprises. The London market is ready, willing and able to serve the demands of Islamic interests to share commercial risks, as you will hear in the next session. And to remind you, the London market is responsible for $90 billion of insurance and reinsurance business via over 350 firms with business derived from over 200 countries. The market is bigger than all its nearest rivals combined. Currently, no market in the world can offer the capital and expertise required to cover so many complex risks that are involved in aviation, marine, satellite communications, shipbuilding, nuclear power, energy infrastructure, deep-sea cabling and tunnelling, to mention a few. I said that to be in a position to make the most of these opportunities, London needs to engage with Islamic businesses and markets. Brokers need to work with the market to develop products and meet their customers' needs as they have always done, and to ensure that London provides relevance in an increasingly sophisticated global marketplace. Through our association, London continues to speak with a single voice, and our message is that we are serious about the development of the Islamic insurance industry. We are keen to work with markets across the world, and there is much that we believe we can do to act as a bridge between the clients who want to be informed and strong underwriting capital and those across the market who want to seize the opportunities. We will, I said, invite leaders from the Islamic business community, government and regulators to London to meet with the market and discuss the issues that affect both. We have done that. We will, I said, also ensure that London will go to those Islamic countries and meet with clients and opinion formers to reinforce just what London can do for the international community, and we have done that. There is much that we as an association can do to work with other partners on the development of international standards for the transaction of Islamic insurance. And London has been a leader in the global insurance industry for over 300 years, and we believe we have the opportunity to play a key role in shaping the sector. Our association is, by its very nature, is an association that is open to all who have a genuine interest in the development of the Islamic insurance sector. We have engaged with underwriters, brokers, law firms, accountants, and the professional bodies to ensure that we can be relevant to all and provide an authoritative voice both in the UK and internationally. We need to remind all parties that Sharia and Islamic compliant coverage is not a different market to conventional products. The Islamic sector is just that. It is a sector of the market as a whole. It is not a different market. It is a model with differences, but it does not need to be reinvented, and it needs to be recognised as an integral part of the global insurance industry. Therefore, as a sector, we must concentrate on educating our client base across the world and explain how products can be delivered to suit the financial risk and cultural needs of that client base. We should not look to highlight the differences. Instead, we should highlight the benefits of the Sharia-compliant model and ethically responsible nature of the product's financial structure. The principles that are key to making the insurance process Sharia are those of transparency, fairness, and participation. These create good outcomes for all stakeholders. So I can now thank all of those of you who have worked with us to create an association that not only represents London across the world, but is making a tangible contribution to the development of the Islamic insurance sector. And I believe that this vision for our association is even more relevant today. So what has been happening in the intervening 4 years, and how are we doing? Well, a few observations on supply and demand. And if I may, I will quote some comments by Mr. Mohammed bin Ibrahim, who's governor of the Central Bank of Malaysia, who made these comments last year. He headed it, "Takaful, the missing link." This is an example from one country, very important country. Takaful can also be the missing link for business. We can see that the potential is enormous just by looking at the number of large infrastructure projects being undertaken. All of these entail large protection needs. Capturing these opportunities would require much greater capacity to underwrite large and specialised risks than currently exists in the industry today. This calls for greater re-Takaful capacity. Given the absence of such re-Takaful operators, alternative arrangements for the industry to come together to pool their capacity, expertise and business needs need to be seriously explored. We already have the essential ingredients: the presence of the world's largest global players in our Takaful market, deep Sharia knowledge within our domestic Takaful and re-Takaful companies, and an entire Islamic finance ecosystem that can be tapped into to really push the frontiers in building re-Takaful capacity. We just need companies that are willing to lead the way. Building this will take time, resources, and a long-term perspective, but this may be a small price to pay to build scale, generate critical mass, and position Takaful as a credible solution for large and specialised risks. This is a perspective from one market, Malaysia, and is an admirable opportunity to allow me to use somebody else's words, much more eloquent than my own. So research concluded that the supply of commercial Sharia-compliant insurance, and we are talking commercial business primarily here, does not even come close to matching the demand potential from the Islamic financial sector. This has changed materially. Over the last 4 years, working in partnership with UK government and business stakeholders, the association has conducted a series of activities to promote the supply and develop the business partnerships and to draft the standards in conjunction with Takaful standards issued by the Islamic Finance Services Board. The association has conducted a number of educational initiatives to ensure that the London market is ready, willing and able to respond to growing demand. We've held conferences in packed rooms with distinguished industry speakers, senior UK government ministers and London-based scholars. The Department for International Trade pledged UK government support in positioning the London market as a global leader for Islamic insurance. The message quite simply was, we in government are here to help. The Department and indeed the government is determined to ensure that the UK remains one of the most open jurisdictions for Sharia-compliant investments in the world, as you have heard. And to facilitate all of this, one of the most important developments in the last year has been the formalisation of guiding principles for the provision of Sharia insurance, designed to ensure that the London market firms can provide Sharia-compliant commercial insurance. It's headed up our guiding principles, and I certainly won't read it all to you, but the introduction says that the principles have been created by the Islamic Insurance Association of London to provide a platform for the provision of Sharia-compliant insurance and reinsurance in the London market. These principles are designed to deliver a clear indication of what those in the London market, including underwriters, brokers, and other practitioners, should expect when transacting Sharia business. The principles are designed to provide a level of certainty for clients and practitioners that meet with the requirements of the provision of Sharia-compliant insurance and reinsurance. These principles make London distinctive across the major global insurance centres in having a clear, defined and published guidance for the provision of Sharia-compliant risk-sharing insurance products, and will support the UK government's stated aim of making London the leading global centre for Islamic finance services outside of the Islamic nations. It has 5 sections, just to give you the headlines. The first one is application and scope, which says that these principles are addressed to all insurers who issue products in the London market that are designed to be Sharia compliant. The second section is high-level requirements and reminds us that we are always observing the pronouncements of the International Fleet Academy and following the standards and guidance material issued by the Islamic Financial Services Board and the Accounting and Auditing Organisation for Islamic Financial Institutions. The third one covers capital management and covers the issues of not commingling funds, maintaining adequate financial resources, the treatment of loans. The fourth section is Sharia-compliant governance, which requires the appointment of a scholar and covers such items as managing delegated authorities. And the fifth covers contract, which, as you would expect, covers matters such as transparency, remuneration, Sharia compliance in the handling of claims, and the approach and treatment of surplus. Other key outputs for the association have included a white paper which summarised a global survey of potential buyers of Islamic insurance. The aim of the survey was to examine market needs and what market needs to do in order to become relevant to the Islamic clients of today, and in doing so deliver the right products in a way that those clients would like to see them delivered. The results highlighted opportunity and challenge in equal measure. 7 out of 10 of those questions said they would buy Islamic insurance products if they were available for their risks. There was a clear demand for commercial, specialty and reinsurance products. At present, just over 1/3 of those who responded said they'd buy Islamic insurance, creating a significant market for this sector. Price was cited as a barrier, with almost half of those questions saying that they felt they were not offered the option by their brokers when it came to placement or renewal discussions, which is concerning. A general thread throughout the survey was that the industry needed to do more to communicate the availability of capacity. Another output from the association worth mentioning is our FAQ document, which you can find on our website, www.iial.co.uk. This creates a permanent record as insurers seek to develop Sharia-compliant solutions. And we should not forget our national training body, the Chartered Insurance Institute, which is globally recognised for quality education. It now has available to students a module on takaful in both English and Arabic. But despite all of this, there seems to be a growing frustration that Islamic investments are not met with the available insurance capacity. Equally frustrating for insurers providing capacity, they do not seem to be seeing the demand. The London market now has several commercial insurers offering Sharia-compliant products. They range from political risks to regions of heightened tension to risk-sharing mechanisms in major UK infrastructure projects backed by Islamic finance. Both company members of the IUA and Lloyd's syndicates are participating in a growing market. The specialist nature of the risks to be protected is matched by the product development expertise and strong balance sheets of insurers in London. It is fair to say, however, that real traction is yet to be achieved. The supply side is therefore growing, but as I said, the demand side is frustrating. We often hear that brokers prefer not to offer a Sharia solution, arguing that conventional products are cheaper and more suitable. The worry is that these comments are not made in the best interests of the client. Another factor is the intense competition from conventional markets, which promotes itself often as stronger, better rated than takaful alternatives. This leads to conventional products chosen to obtain better client protection. London can help here. Indeed, its available takaful capacity offers rating levels perfectly acceptable to commercial clients. Despite these factors, it is our belief that there is a growing demand for Sharia-compliant products, voiced by senior representatives of our clients through risk managers and advising scholars. I wonder whether the available supply and demand is somehow disconnected, and this disconnect should be subject for discussion by the scholars. If we are at a turning point, both the London supply side and that existing globally must, of course, be ready to satisfy new demand. So looking ahead, according to AM Best, most regulators and Sharia scholars have been reluctant to obligate primary takaful operators to cede business to re-takaful operations as a measure to protect policyholders. This stance causes them to turn to strong creditworthy insurers, usually conventional players. Without the buy-in from Sharia boards to make re-takaful the default search for primary takaful operators before approaching conventional reinsurers, re-takaful operators are unlikely to gain access to high-quality business. AM Best added that unless regulation and Sharia boards enforce the use of re-takaful, the current re-takaful model may be under threat over the long term, unless the model can be repositioned and seen to add additional value to the reinsurance market. So a major hurdle facing the Islamic reinsurance market is the absence of enabling measures, even a mandate requiring Islamic insurers to cede business where possible in a Sharia-compliant manner. Given that there should not be material differences between the takaful and conventional product, perhaps now is the time to nudge the market through enabling measures such as regulation and some form of mandate. And so, in summary, we at the Association believe we have done all we can to energise and equip the supply side here in London. London market is able to offer Sharia-compliant insurance through an Islamic window, ensuring the purity of the premiums and claims payments, ensuring premium is invested in Sharia-compliant funds, and accommodating a wide range of classes of business. The London market's window structure allows clients access to the full extent of the London market's reinsurance capacity. London is the leading centre for Sharia finance services outside of the Islamic world, with access to a supporting ecosystem of banks, legal advisors, and educational institutions. Reinsurance firms in the London market are ready to create the necessary windows on demand and provide significant reinsurance cover. Confidence that the products are fully Sharia compliant, thanks to the guiding principles, London is unique as the only market outside the Islamic world which has such a framework. Access to London's world-leading capital and expertise. Only London can provide the necessary cover for the most complex risks. Greater access to international reinsurance capacity means that when significant losses occur, such as through a natural disaster, claims are paid and the domestic insurance market is protected. London market policies are all A-rated, strong financial products that can be relied upon. There is a strong political and regulatory commitment to Sharia-compliant financial products in the UK. So we will be focusing our attention on the demand side. We believe that, I repeat, that we have done that which we can to create the supply-side environment that can satisfy the opportunity out there. So we're about to move on to a session which is going to talk in some more practical and detailed terms about how you access the London market. But I hope that's given you some sort of a reminder of what we've been doing over the last 4 years under the umbrella of the Islamic Association. So thank you for your time, and thank you, Iqbal, again for inviting me to speak, and I very much hope you enjoy the rest of the conference.